Bitcoin scammers are running away. Wall Street is waking up. And in the middle of all this chaos, one company has quietly become the largest Bitcoin whale in the world. MicroStrategy. Right now, this software company turned Bitcoin Vault controls 629,000 Bitcoin, worth over $72 billion. That's more than BlackRock, more than Tesla, and more than entire nations. But how did a once-forgotten tech firm transform itself into Bitcoin's most powerful corporate holder? And more importantly, what happens next? Because if Michael Saylor is right, MicroStrategy could soon become the first trillion-dollar Bitcoin company in history. This isn't just about a stock. This is about the Bitcoinization of finance itself. Let's break it down. To understand MicroStrategy's insane rise, you need to rewind 30 years. Founded in 1989, MicroStrategy was a business intelligence software company. They built tools for corporations to analyze their data. During the dot-com bubble, their stock soared to nearly $3,300 per share. For a moment, they looked unstoppable. But then came the crash. In 2000, the SEC accused MicroStrategy of accounting fraud. Their stock price collapsed 99%, wiping out billions. For the next 2 decades, they struggled in obscurity. By 2019, MicroStrategy was still alive, but barely. A small software company with around $500 million in cash. Not exactly the next Microsoft. And that's where Michael Saylor comes in. In 2020, as the Federal Reserve printed trillions of dollars to fight the pandemic recession, Saylor realized something terrifying. His company's $500 million in cash wasn't safe. It was melting away in real time, thanks to inflation. He started searching for a solution. Gold? Too slow. Real estate? Too illiquid. Stocks? Too correlated. And then, Bitcoin. For Saylor, it was the perfect answer. Digital gold, with absolute scarcity, built for the internet age. And in August 2020, MicroStrategy shocked the world. They became the first publicly traded company to adopt Bitcoin as their primary treasury reserve asset. That move changed everything. In August 2020, MicroStrategy bought 21,454 BTC for $250 million. Wall Street thought they were crazy. Bitcoin was still considered a fringe asset. Critics called it reckless, even suicidal. But Saylor doubled down. By December 2020, MicroStrategy had purchased 70,000 BTC. To put that into perspective, Tesla would later buy just 10,500 BTC. Square, now called Block, bought around 8,000 BTC. From day one, MicroStrategy was operating on an entirely different scale, and it wasn't just corporate cash. Saylor began issuing convertible notes, bonds, and debt to raise more money. Every time he used it to buy more Bitcoin, he was turning MicroStrategy into a leveraged Bitcoin ETF before ETFs even existed. And the results were dramatic. As Bitcoin surged from $10,000 to $69,000, MicroStrategy's stock price exploded. It went from under $150 a share to over $200. For a while, Saylor was a genius, a visionary, a hero to Bitcoiners worldwide. But then came the crash. By 2021, MicroStrategy had already secured more Bitcoin than anyone else. Today they hold 629,000 BTC. Compare that to Tesla, 10,500 BTC, Block, 8,000 BTC, Coinbase, 9,000 BTC. All other public companies combined, less than 100,000 BTC. MicroStrategy is not just the biggest. They're bigger than the entire rest of the corporate sector combined. And the crazy part? They're still buying. In fact, they've announced plans to eventually hold 1 million Bitcoin. That's nearly 5% of the entire supply. No company, no ETF, and no government is even close. But the size of their holdings is just one part of the story. The other part? How the market is valuing them. In 2020, MicroStrategy was worth just $1 billion. Today, it's worth $120 billion. That's a 120x increase in less than 5 years. How? Because MicroStrategy isn't just holding Bitcoin. Investors are paying a premium for access to it. Right now, the company trades at around 1.8x its net asset value. In other words, you're paying $80 for every $1 of Bitcoin it holds. Why would anyone do that? Because investors trust Michael Saylor. They believe in his strategy. They see him as Bitcoin's ultimate corporate champion. And because MicroStrategy stock can be bought by pension funds, ETFs, and institutional players who can't touch Bitcoin directly. Think about it. In the early 2000s, gold ETFs unlocked institutional adoption of gold. MicroStrategy is playing the same role for Bitcoin. It's not just a stock, it's a Bitcoin gateway, and that's where Saylor's master plan comes in. In 2024, MicroStrategy announced something shocking. 3 new investment products. STRF, a conservative Bitcoin yield product. STRK, a balanced Bitcoin strategy. STRD, a high-risk, equity-like Bitcoin play. In short, Bitcoin packaged like bonds, balanced funds, and equities. Why does this matter? Because institutional investors love structured products. Pension funds, insurers, banks, they can't just buy Bitcoin directly. But they can buy something that looks like a bond or an ETF. And that's exactly what MicroStrategy is offering. This creates a reflexive loop. More investors buy MicroStrategy products. MicroStrategy raises cash. They buy more Bitcoin. Their stock goes up. More investors pile in. It's the same loop that fueled Tesla's meteoric rise. Except this time the underlying asset isn't electric cars, it's the hardest money in human history. Michael Saylor's vision is bigger than just MicroStrategy. He believes every corporation will eventually hold Bitcoin as a treasury reserve. He believes nation-states will compete to stockpile Bitcoin. And he believes MicroStrategy could one day hold 1 million BTC, making it one of the most powerful financial entities in the world. Think about it. If Bitcoin reaches $1 million per coin, MicroStrategy's holdings alone would be worth $1 trillion. At that point, they wouldn't just be a company, they'd be a sovereign-level player. That's the endgame. The Bitcoinization of finance, where corporate balance sheets, sovereign reserves, and global capital markets revolve around Bitcoin, and MicroStrategy is leading the way. MicroStrategy has taken on billions in debt to buy Bitcoin. If prices crash, their stock could collapse. They are also 100% dependent on one man, Michael Saylor. What happens if he steps down or investors lose faith? And then there are regulators. The SEC, accounting rules. Even governments themselves could challenge MicroStrategy's aggressive strategy. Finally, there's the obvious risk. Bitcoin itself. If it fails, so does MicroStrategy. This isn't a safe bet. It's an all-in gamble. But sometimes, the biggest risks create the biggest rewards. In 2020, MicroStrategy was a fading software company, clinging to $500 million in cash. Today, it's a $120 billion giant, holding more Bitcoin than anyone else in history. They went from obscurity to becoming Bitcoin's corporate standard bearer. And the journey is far from over. This is not just financialization of Bitcoin. This is Bitcoinization of finance. So now the question is, would you rather hold Bitcoin directly or own a piece of the biggest Bitcoin whale in the world? Drop your answer in the comments below. And if you found this video valuable, hit like, subscribe, and share it with someone who needs to understand what's really happening with Bitcoin and MicroStrategy. Because history is being written right now, and Michael Saylor is holding the pen.